sort of just edging higher? You said tired earlier, and seasonality is going to start to be a problem. Is that something to keep an eye on?
Within a couple of weeks, usually. July sometimes is hit or miss. Now, you know, the fundamentals can override that sort of thing, but we have been riding a pretty decent run of seasonal tailwinds up until a couple of weeks from now. That's one issue. Another is that the vigor behind the reopening, you know, cyclical acceleration type trade, that was basically back in March. And it's just kind of been correcting ever since as yields have come down. And they're trying to protect the uptrends here. I mean, the cyclical stocks have not broken down decisively, but they've definitely surrendered some of the leadership profile. Meanwhile, you know, growth has refound a bit as yields have come down, and people have said maybe we just buy the less crowded, steady, you know, big tech performers. And that's been the push-pull within the market for a while. It's held the indexes largely in place for a couple of months. Don't see it necessarily changing. What's fascinating today is some of the analysts coming out and defending the FedExes, the GEs, the CSXs, saying they're down 9 or 10%. We still think that's an opportunity, and some of that got some traction when it came to FedEx and GE today.
Yeah, were you looking at the transports versus the chips lately? NVIDIA also making a new all-time high, back to 1999 IPO levels. That's been the hallmark of the chips.
Exactly. I mean, NVIDIA, the graphic chip, I mean, they're by far the biggest in the group right now in terms of U.S. chip makers. They have been driving things. And, you know, transports have been, you know, hit or miss, down to like, you know, 8 or 9% off their high.
Mark, you're pretty bullish for the rest of the year. Is that right?
I am. I mean, I think we've seen the growth stocks recuperate some of their losses or some of their lack of performance in the first half of the year. And we've seen some of the bellwethers get to new highs. So we saw DocuSign, which kind of was in the doldrums for the first half of the year. That stock's up 50% in a month while no one's been paying attention. We talked about Facebook yesterday. There's just, I think, a rebound in some of these growth stocks that we're going to see, as well as a reacceleration in the IPO market, which has had a little bit of a short window of a lack of IPOs. And I think we're going to see a lot more in the second half. Mike mentioned July being a little bit of a tepid period. I see some more capital markets activity for July, and it portends a better second half for those markets.
And where do you want to be in the second half of the year? Do you want to be in the growth names that have outperformed, that you've called here on the lower rate trade, or stick with what's worked year to date so far, which is kind of the opposite, the financials and industrials and energy?
It's a great point, and I think we've seen some of them, again, not have the kind of performance that we saw in 2020. But at the same time, they're continuing to gain market share. Their top-line growth is accelerating with the reopen trade. So I want to stick with some of those tech names. The group we haven't mentioned is biotech. Biotech has not had a great first half of 2021. There's been few, besides the vaccine makers, of those stocks that have really accelerated. I think there's going to be a second half where we're going to see FDA approving some drugs. We got some of that with Biogen. And I just think that group has underperformed, and you want to put some more capital to work there because it has underperformed over the course of the 2021 year and should do better in the back half.
Shepard Smith here. Thanks for watching CNBC on YouTube.